What's going on today? It's Wednesday, March 23rd. I'm Frank Curzio, the Wall Street Unplugged podcast, where I break down headlines and you guys know the rest. Tell you what's really moving these markets. Let's bring in Daniel. Not going to give you too many compliments this time. I do that enough on past weeks. But what's going on, buddy? How's everything?
I'm well, Frank. How are you, sir?
Hanging in there, keeping busy. You know, markets all over the place, at least a little positive past week or so.
Yep.
And I want to start by going over Powell's comments, which are interesting, which came out Monday. By the way, he testified on Wednesday, right? He told us everything, about the markets and the economy and how he expected interest rates, and it was cool. I guess it was seen as dovish and only 25% rate hike like expected. But now he came out on Monday and said a 50 basis point cut is now expected next meeting, the meeting after, depending on what's going on. But it was like more of a tightening or bearish tone, and that wasn't priced into the market there because Goldman came out immediately after and said, okay, we have to adjust our estimates, and now we're expecting a 50 basis point cut at the next meeting and a 50 basis point hike at the next meeting and another 50 basis point hike at the meeting after. They weren't expecting that. Now, the interesting question is, why did you have to come out on Monday? Because I know what he went on Wednesday, it was 25 point hike, and a lot of the Fed governors came out and said, we need to be at 2-3%. Well, you need to go faster. And I think they talked to him and said, I don't even know what they said. They said, listen, I would have said, listen, you're delusional. You've lost all credibility. You said this was going to be transitory for 12 straight months. You said you're going to raise rates after CPI went over 2%. It's 7%. It's going higher, still bottleneck concerns. It's just funny how he came out just a couple days later just to show you. So if you think that the Fed has their finger on the pulse here, it's probably worse than it's ever been right now, where they are so confused and have no idea, when I think it's just very simple right in front of you. We have inflation. There's no cure for it unless you raise rates and take money out of the system. And you could do that slowly, and this could be many years, or you could do it really, really quickly, which you should be doing it fast because we could see 10, 12% inflation right away. What are your thoughts? I was just surprised, but that was market moving.
I can't believe I'm going to do this, so I apologize up front because I can't say what I'm about to say without coming across as defending him. I'll tell you why I think he did this and why I think it's smart. Now, remember, I'm looking at the world through how I believe it is on their end, not how I think it should be or want it to be. He is trying to, let's use that analogy of flying a plane. We keep seeing these. How many times did we see soft landing on the economy today? Yeah. And yesterday on CNBC, we have TV on. I don't have a TV in my office yet. I'm working my way up to that, but Frank does. Anyway, the soft landing of the economy. So you don't want to raise rates too high because it could cause a recession. Nobody wants to cause a recession. Stock market prices lower, jobs and everything like that. What Powell is doing and what he's done since the great 180. From inflation being transitory, was that in November last year? It was November, right? Not December.
It was over a year ago that they were saying it was transitory.
No, when he admitted it that it wasn't. November. It was November of last year. He said,
okay, yeah, it's not transitory.
Okay, it's not transitory. Yeah. And from that point on, he has been basically trying to say what's going to happen at the next meeting. And I think, don't take me out of context here, but what I think was smart about this is that you just raised rates for the first time since 2018. You do the 0.25, 25 basis points, because you can use the Russia invasion of Ukraine and higher oil prices and stuff as an excuse to not raise higher. Now you're already out there a month ahead, Frank, and trying to say, listen, brace yourself. We're willing to do more faster than what we've been doing in the past. We're nimble. He's trying to say, hey, we have options. We can control this. I don't believe him, but I give him credit on trying to stick with it. Listen, if you're a carnival barker, go out there and bark. You know what I'm saying? He's like who are the people that go out there and get the crowd riled up before rallies? What do they call it? Promoters, or I don't think that's the right word.
Yeah.
I think that's what he's doing. And from that angle, I think it's smart because the markets pull back a little bit during his either questionnaire or speech or whatever it was. Goldman comes out with that. But now what do you think the market is doing right now? In my opinion, it's going to be pricing in 50 basis points for the next two. From that perspective, I think it's smart, and I can't believe I'm defending these people, Frank.
Well, I hear you, except the only thing is when that guy barks at a carnival, we're hoping that he tells the truth in his predictions. Where, not that he didn't tell the truth, but so far looking back at when you've been barking, you've been so freaking wrong that what's different now? And why didn't you say this a week ago? Why are you saying it 4 days later? So what happened those 4 days to make you say this, that you couldn't say it at that big meeting, which, look, the markets were up ahead of that and maintained, that, and they went up, just a couple days before, but also into that day, into that meeting, they were up, and they held those gains after he spoke. I don't know if they hold those gains if he makes these comments, but something happened, and whatever happened, I really don't give a shit, to be honest with you. The truth is, inflation, it's not going to ease anytime soon. We're seeing it all over the place. I talked about supply chain concerns and bottlenecks. You're still seeing them. They're terrible right now. It's not an easy fix. Inventories are at 30-year lows for commodities. That's not an easy fix. I mean, those who think inflation is just going to go away by itself and ease, you're crazy. It's going to go higher from here. And we're seeing that. We're seeing that even in the results that are being reported when, Nike just came out and reported great earnings. We'll talk about that later. And, the earnings were great because they said we're still seeing major supply chain issues and we would have did much better. Right? We're still seeing strong demand. We can't meet that demand. But, Nike said that they're selling products at full price right now, so they don't have to discount them as much, okay? A clear sign of inflation. If that's not a sign of inflation, you want to bear with me because I just got this email from a real buddy, Steve Vermont.
On the fly. This is breaking.
Yeah,
I like
this is breaking. This is actually funny, so I have to send this to you. Okay, so he goes, sign of the times, and he has a book. It says Bentley and buying a Bentley, and it says that the Bentley is I don't think it's from him buying. He might be buying. I know he does very well, but it's $404,000. And then it says window tint is $400. And it says ceramic coating is $10,000. So those are the add-ons. And then it has something in there. I'm not kidding you. That says market adjustment. Market adjustment.
Surcharge?
Market adjustment of $75,000. So it originally was, I got to look at it, was $404,000. Now it's $491,000. A market adjustment. No explanation of what that market adjustment. I explained this where, same with me with the fees. When it came to fees, I went to Miami and used Expedia. They tell you the full amount. If you go to Expedia, they tell you exactly what the full amount is. When I went there, they charged me an extra $50. They said, you got to come down. I said, it's not on Expedia. What are you talking about? They said, no, you got to. Everything is like these surcharges and add-on fees. Like it can't continue to the point. Like, I'm changing my spending habits. I know a lot of people are going to be changing their spending habits. It's getting insane right now. But also, I'm a data guy. I want to see it getting better. I don't see it getting better. I mean, I'm not even talking about Russia-China because Russia-China is a temporary problem. It could be 3 months, it could be 6 months, 9 months, whatever. But I think oil prices will balance out $75, $80. We still have massive inflation going into that. That just added to it. But as that comes down, that'll be good news. But now you have China, coronavirus surging, and, that's going to create even more supply chain bottlenecks. I don't see it unless you're taking money out of the system, which the Fed refuses to do because they have this hope strategy, and that hope strategy has been around for 18 months now. You've been hoping that inflation is not going to go higher for 18 fucking months. It's not going higher. It's transitory. Now you flip and say, we're going to have to aggressively raise rates. We're going to go out there and aggressively raise rates by 25 basis points. Come on. I mean, look, it's going to be painful. It's almost, man, I don't even know what's a good analogy, but it's, if you're hurt, you want to rip off the Band-Aid. It's going to be much, much more painful the slower you go and the more you do this than just doing it right away. And you're looking, instead of this being a 6 to 12 month problem where we take our medicine and that's it, you're looking at it dragging out for many, many, many years, which is going to really hurt companies. They're going to start cutting back on spending. They're going to see earnings get hit. They're going to they're going to fire employees, lower expenses. You're going to see wage growth start easing, and they're going to say that's a sign of inflation going down. No, it's a sign that they can't pass on costs to consumers anymore. That's a very bad sign. Wages going up means that's more money for people to spend on things.
Right.
When you see that going down, don't look at it as that's a positive because inflation's going down. That's a negative. That means earnings are going to get freaking destroyed pretty soon because people have less money to spend on discretionary things. I don't know. I mean, what I do know is even with all these things with China is actually rebounding, right? It shows like trading opportunities and stuff like that, which is pretty cool.
What a difference a week makes. I don't know if you have any charts of BABA or, Tencent or some of the other big ones over there in China, but it is not a coincidence that they basically came out, the government, I don't want to say President Xi because I don't want to misspeak, but the government basically come out and said that they were going to support, i.e. the stock market, the economy, and foreign listings, which over-the-counter trades, we have Alibaba and different things. And I know they rallied 10 or 20% the day they made that announcement, and then they pulled back.
80,
and now
80,
a week ago,
2 weeks ago, and
2 weeks ago,
14. Yeah, like a little bit over a week ago, yeah.
And I think we both agreed on this. I mean, these are tradable. The hard thing for me in my perspective from this is I understand the thesis behind buy and hold China because they're massive population, huge growth engine. I get all that. I'm just so worried about the overreach of the government and the way they can change the rules when they wish as quickly as they wish. Mm-hmm. However, I do think they're, like we said last week, these are tradable events. It's just tough because, Frank, you know better than me with your experience and stuff. Investing is one thing. It's hard enough. Trading is very difficult, emotionally and manageable. Not a lot of people have the majority of the time that's needed to be a trader and all that, me included. I'm simply saying that makes me worry for the average person like myself to have to put on that trading capper mindset versus a longer term. But I still think that, hey, if you go into it with that mindset, use positioning sizing correctly, and instead of BFTD, buy effing the dip. now it's sell the rip. You know what I mean? Yeah. It's just but hey, that's why you pay attention to policies and governments, because they will give you the roadmap on how to make a lot of money. And as individuals, nobody's looking out for you except you, Frank and I included. We don't care near as much about your money as you do, and you don't care about our money as we do. That's just the way the world works. That's okay. So pay attention and invest accordingly. But hey, if you followed it, if you took Frank and Daniel and said, "Oh, these guys are great, I'm going to buy some China," you're welcome. Now sell some of it and take some profit.
I know. Long term, it's hard to invest long term right now.
It is, yeah.
Probably seeing the short covering come in. The short covering is obviously coming in. You could see that in these rallies. But how could this be sustained? How do you what's the catalyst here? I don't see it. I don't see the data showing that this could be sustained. Not to mention we'll get into some stocks in a little bit, there's a big difference between growth stocks and technology stocks. Some technology stocks are just really good quality names that, were put in that growth section, but some others are getting absolutely destroyed. But even, staying on deflation really quick, I think that, nobody really has anything to worry about, because inflation stings most if you earn less than $300,000. Here's how to deal with it, which is an interesting article by Teresa Giarducci, which is, I just found interesting. But yeah, you were laughing at part of this article, and it's funny how it's going to be translated into whoever you listen to, or whatever, whoever you're a Democrat, Republican, liberal, whatever, woke. It's just, the articles that are out there, whatever, just how it explains inflation. I thought it was funny you brought it up. I'll let you go from there, because this is a funny article that's on. It's actually on Bloomberg. It's on Bloomberg.
Bloomberg opinion, yeah. And I thought this was a joke when I first read it, so I saved the link and I wanted to show it to you. You already read the title. And okay, it's a little unfair to talk about somebody that's not here to defend themselves. But this Teresa is the Schwartz Professor of Economics at the New School for Social Research. It's amazing how titles, the longer they are, I think they sound better, Anyway, she points out that, hey, inflation is here, and she has some good stats, and she does have two solid points. I will give her that, and I'll highlight those in a minute. But the majority of it is just hogwash. It's ridiculous. It's almost laughable. And if you're an average Joe reading this, I don't know how you're not insulted. But again, that's my opinion, not everybody's. You pointed out, she starts it off with, if your income is more than $289,000 a year, the run-up in gas prices may be alarming, but it's unlikely to hammer your overall finances. The higher 1%ers or wealthy people pay only about 1% on gas and oil of their take-home pay. Obviously, that's a lot higher percentage for us lower income earners. She points out about food prices, energy prices, and such like that, but then she gets to how do you deal with it and some changes to be made. And she says, I expect that most affected will adjust to inflation in a classic way by shifting away from relatively expensive items toward close substitutes. Here are some ideas to do that. First, this is a good point. I mentioned she had two. This is solid for everybody to pay attention to. First, you have to know your budget to control your budget. Budget takes effort, but it gives you power, and the power is even more important in inflationary times. That is great. She should have stopped there, good investing, and signed her name. That's smart. Everybody's on a budget, Frank. We're just on different size budgets. Her idea to deal with gas prices is to consider public transportation if it's an option for you. She points out that fares are only up about 8% compared with gasoline prices, thank you, Joe, are up 38%. How about that? And she says now may even be the time to sell your car. It certainly isn't time to buy a new or used one. Prices have stabilized a bit, but Frank, used car prices are still up more than 40% from a year ago, and new car prices are up 12%. So what's the takeaway? Ride the bus and sell your car to deal with higher gas prices. When it comes to food, animal-based products, who likes real meat, Frank? It's skyrocketing as well. We can live off plants and vegetables. And if you're a pet owner, now this, Frank's going to be upset with me because Frank, Out of the two of us, Frank is the animal guy, not Daniel. I don't dislike animals. I'm just not an animal person. And she says, if you are one of the many Americans who became a new pet owner during the pandemic, you might want to rethink those costly pet medical needs. It may sound harsh. Frank, you got to let me know if you've ever even heard of this. It may sound harsh, but researchers actually don't recommend pet chemotherapy, which can cost up to $10,000 for ethical reasons. One quick side note here, Frank, and I'll give you back the floor. I have a good buddy of mine, great friend of mine out in Arizona. They have a dog. They have pet insurance now. Now, I think the dog has had not one, but 2 ACL surgeries. ACL surgeries. Thousands of dollars. And he made a comment to me, and I can genuinely say I love this guy. He made a comment with me with a straight face about how, man, I'm glad we have pet insurance because it would have cost an arm and a leg.
Yep.
I'm just telling you, people, where I come out down to with pets is if my pet needed not one but 2 ACLs, I wouldn't have a pet anymore. The pet would be in heaven. It would be comfortable.
I'm telling you,
It'd
Peter's
be
going to close us down.
I know. Daniel at CurzioResearch.com.
Yeah.
I grew up with a dog. Loved the dog. It was Chance.
Peter is
Wonderful.
more powerful than the EPA. I mean, two places you don't want to mess with because it has nothing really to do with anything that they support. They just love the power. I'm saying that from an animal lover, but it's just funny. It's the truth. It's the truth. But yeah, I just think it's funny just putting it. But yeah, pet insurance. Yeah, all right, just let them die. Let them die and whatever. And again, they're like family, and people who, have dogs, and that's all they have, and maybe they lost family members and stuff like that, whatever. And I get it. We just have like a million animals that are all,
Frank,
growing up.
Can I ask you a personal question?
Sure.
Would you spend $10,000 to keep a pet alive?
Depends how old it was.
All right. I respect that. I sat next to a guy, a gentleman on an airplane, who said that they spent $10,000 on a cat, him and his wife. Mm-hmm. And I'm not the guy that says, "Oh, I think you're stupid because of doing that." I'm just simply saying I'm not that guy to do it. To each their own. You love you're right. They're like family. I'm not that guy. I'm just saying, hey, that ain't me.
Yeah, some things mean more. People will spend $2 million on a car, or like we just met with the Bentley, $500,000. It's just people can spend what they want to spend on and what they believe in. It's not even that. What I do want to go back real quick is the article because when you're looking at Teresa Giarducci, which she is a professor of economics at the New School for Social Research. So the New School for Social Research is a graduate place that is, and I give you some statistics here, 800 graduate students in New York City, 75 plus full-time faculty members. And then you look at the academics. It's liberal studies, politics, sociology, economics, gender and sexuality studies, creative publishing, and what's critical journalism? What is critical journalism? I don't know what critical journalism is. Do you?
I don't know what half the stuff is.
Isn't journalism? Critical journalism. That means you're going to disagree with everyone?
Serious.
What is
serious?
I want to look it up. What is critical journalism? like it's almost like, hey, if you want to be controversial and throw yourself out there and support what's the girl that is actually swimming as I don't even know if I'm going to say this right because they might throw me off the network because I don't know what month it is because it changes if it's
Leah.
Yeah, if it's transgender, I think that's the proper way to say it. I mean, it changes all the time. I think so, but you're talking about. I mean, if I knew this seriously, I mean, I kind of wish I had boys. I'd say, hey, you know what? You can get scholarships and set world records and make a fortune, right? I mean, if I was LeBron James, man, imagine him playing against everybody. I mean, what's so funny is how this. Remember the women's movement, the Me Too movement. This totally trumps them. This totally if you're a woman, you're a piece of garbage because we're like, that was like the Me Too movement. Women, fought how hard to get equal rights, and now, I mean, this is like it doesn't even matter. Like I don't care. They're setting records. Yeah, we don't care. And to me, this is laughable, but it's one of those issues that, they want you to talk about. They want to be controversial. They want to yell top of the roost. This way people argue and debate, and this is what they want. And in politics, it gets more page views. But it's just funny how this is actually an agenda, right? I mean, does it help anybody? I don't know. Does it really? I mean, the bottom line is when you're looking at stuff like this, you have to be careful what you're reading, like inflation. Whatever. It hurts everybody. It hurts everybody. I don't care who you are. I don't care how much money you make. And you can say, well, it's going to hurt me less if I make more money. If you make more money, it's probably like dollar-wise, it's going to crush you even more because so many of these people, if you're making millions of dollars, I mean, I've been in this for 30 years. I've interviewed a lot of people. I know a lot of wealthy people. Usually people make a lot of money, live well beyond their means. It's always like, because it gets to the point where I need to show you and I need to show my neighbors. And it gets to the point where now you have these massive expenses that are going to only increase dramatically. Right. So, not that I'm putting anything on them. It's their own fault. But even, let's say the people who don't own assets, that didn't participate, in that move where, that we've seen in inflation over the past 3-4 years, it's been rising. And, if you own assets, that's great. Your home price, everything, your cars, much, much higher, collectibles, whatever. But if you don't have that now, look at the bills that you're paying and food and stuff like that. It's incredible. It's incredible. I mean, going out, I went to Jersey Mike's. And I got a foot-long sandwich that I split with my wife. And it was $21 for the meal, which is a soda and a bag of chips.
You got 2 sodas, obviously.
1 soda.
1 soda, 2 straws?
1 soda, and I had to get another soda. It was $21.
Whew.
I mean, why don't you charge $30? What's the difference? It's getting to that point, which is crazy. Anyway, but you have to account for this when you're investing. I mean, you're seeing it across the board where, we saw Nike come out and report great numbers, and they said it was led by pricing power, reduced promotions, able to sell products at full price. And then they said that it would have been much, much better if, those inventory, issues weren't around that, but they said it's creating, and I'm using their words, major obstacles. They cut ties with DSW and also, lower their exposure to Foot Locker. You saw those names get. I'm not too sure where DSW is. I'm sure it got nailed, but Foot Locker got annihilated. But with that said, and when I'm looking at Nike, it did go up on that news. Mm-hmm. Exposure to China, which is going through lockdowns again, for COVID spreading, and they only reaffirmed their 2022 guidance. Only reaffirmed it. Which calls for mid-single-digit revenue growth and an improving supply chain situation. So you didn't raise estimates or go crazy. So as good as those numbers were, can people continue to pay full price for a lot of these things? I'd worry about Nike's one of the greatest companies around. They do a great job of how to manipulate earnings. A lot of their growth is tied to China. So let's see how this plays out. I don't know if I'd be buying Nike right now on this, but what I would be buying is the Googles, Apples, and Amazons. Amazon especially. I mean, we made well over 100% on it, and the numbers more than me. And then we actually said this is still a buy here. It was like an 18-month period where the stock did nothing while everything else moved higher because it moved higher so fast. And then when everything got hit recently, it got hit along with everything. Went down to what, 2,700, you said? 2,600, 2 different times?
Yeah, I believe so.
Now we're back up to 3,300. Amazon is, I think Amazon's a screaming buy here. I mean, just blowing out the earnings, doing everything right, paid employees more money. They're going to stick around, right? They did the right thing. That's what hurt them 2 quarters ago. Last quarter, they absolutely annihilated the numbers, and it still fell along with everything else. But when you look at growth names, you have to avoid growth in this type of market where the Fed is reducing its balance sheet. Rates are going to rise, so you don't carry those huge multiples above market when you're going to see that growth slow, and you're going to see the growth slow. But Google, Apple, Amazon, these guys are seeing that growth. They have the numbers. They have massive balance sheets. Like markets like this make these guys even bigger because now they're flush with cash and can really buy any asset they want. Right now, at a 30% discount, it's probably going to be at a 50% discount, 60% discount for some of these names. But those are some of the names that I like here that have been doing pretty well.
Those are the low-hanging fruit, and I don't want to put words in your mouth, but I know you're talking about a longer-term perspective with these because these are amazing businesses, and that's the mindset that I definitely want to get across to a lot of listeners. I know you do the same with that. There is a huge difference between growth that actually is profitable and growth at all cost. And the stocks that are really getting hammered, and Amazon, Google's and all that got thrown into that, Facebook or Meta now, that even popped a little bit coming back. Those are in their own league because, like you said, they are successful businesses. If you took off the names of those companies like Facebook or Meta, Amazon, and you looked at the return on assets, the optionality, the pricing power they have, and forgot about, what the name was, if you just looked at it as a box that generated returns that you could just put money into, it's amazing. And you would want to put as much money damn near into those boxes as you could. That's a big difference. So yeah, be selective when you're buying growth like that. I think all those are great. Like I said, as long as you have a longer term time frame and can handle some of that volatility. Turning to assets to buy or stocks, insider buying. We've talked about this, Frank. You always want to look to see who's buying shares, depending on who it is in the company. But AutoZone, I believe it was the CIO, recently bought about $500,000 worth of shares. That was, I think, a week ago. The fun thing about AutoZone is they're one of the best businesses run because they are focusing on commercial and retail. They do it yourself, do it for you. And Frank, that everybody should put AutoZone on their list and Auto Parts and the other ones, because if you're that worried about that, that's a good pulse on where the car market is and where autonomous driving is. How in the world would you continue to see these guys buy back their shares? And AutoZone reported amazing earnings last quarter. They wouldn't continue doing that if they were about to be replaced by driverless cars and all that kind of stuff. So look at those kind of companies that have great operating profits as well as hard assets. I've talked till I was blue in the face about Berkshire Hathaway. That's still an easy buy and hold, but nobody's going to listen to that. So let's move on, Frank.
No. Listen, I mean, there are, as bearish as we are on this and just, saying that you have to be worried, you have to adjust your portfolio. Not everything's going to get nailed. I mean, commodities are great. Gold is great. Uranium has been great. Real estate has been great. You look at banks, guys, banks. I can't tell you, and I covered this in our Curzio Venture Opportunities issue, which you're going to get in a little while if you listen to this right now, if you're subscribers to that newsletter. But, I have research where these guys took all the quotes from last quarter from the banks showing how high interest rates. I mean, these guys have not made money, right? They've made money on fees, right? So non-interest securities or areas. They're talking about 200 million, 300 million, massive, massive increases. Stifle, just so many of them, just all the banks across the board. But just seeing what higher interest rates going to do for that industry and getting them at a discount is incredible. But I know you wanted to talk about Goldman and that deal with Bitcoin. I mean, Bitcoin's really starting to surge again, right? So let's see if it passes that 44,000 level. But yeah, I'll leave that to you because Bitcoin, I I think we're going to see this thing really break through 44,000 this time if it does and go a lot higher. Yeah,
I'm not sure where it is. It bounced around the 40 mark, which is good to see as an investor in bullishness. But the big news was recently with Goldman Sachs. So Goldman Sachs and Galaxy Digital just completed the first transaction of a Bitcoin option. It's actually an NDO, Frank, and let me pull this up here. I wasn't even really familiar with, I know that banks trade over the counter and such, but the big takeaway here is Goldman is the first major Wall Street bank to do this. Galaxy Digital, who we've talked about a lot, run by Mike Novogratz, ex-Goldman partner, they facilitated an option trade in Bitcoin that was settled in cash. So it wasn't settled in the underlying asset. Details were light. They didn't talk about, I'm not sure if it was a Goldman trade for Goldman, if it was a Goldman trade for Goldman clients. But Galaxy Digital put the press release out. Goldman did, and they're going to hide out like they do and just try to maintain no exposure, which I appreciate, or attention. But this is huge because what I think about this is, and the quote from the Galaxy Digital people were saying, hey, this is it solidifies, it increases our partnership with Goldman, but they hinted at, hey, other banks are going to do this. What's the greatest form of flattery? Plagiarism. You think JP Morgan and all the other big banks are going to sit by and let Goldman do over-the-counter trades if it's all productive or profitable? Absolutely not. Everybody will pile into this. And Galaxy Digital is not the only player in the game, but I think they're going to be one of the major players in the game. I think this is the easiest option to we could timestamp this as a fun time and say, hey, if you bought Goldman Sachs, Galaxy Digital, and Bitcoin right here, we could kind of timestamps those over the next 6 months and a few years. I think that's huge because I think it opens up the floodgates. It shows you the desire for Wall Street to get more involved in crypto trading or derivatives, and it also shows that if Goldman's going to do it, everybody else on Wall Street will, in my opinion.
And, this comes back to, and I know we had a back and forth on this with Biden's executive order, but, Biden could have come out and said, we're not doing anything and, just made it cloudy. He didn't make it cloudy. He made it clear that he wants to encourage investment in cryptos. And that's what the big guys needed to hear because there's 250 trillion in assets under management. And these clients, you can read stories, just Google it. It's Financial Times, Wall Street Journal. These clients are demanding. They want to be in crypto. From a risk reward standpoint, it makes a lot of sense. This is where all the innovation is coming from right now, like pure innovation. And to see that and now right away and you're saying, Goldman did announce this and put in a press release. Because
not yet anyway, yes.
I mean, this is a small thing for them, but don't get me wrong, because, with us, we have press releases, again, for our Curzio Equity Owners Token and say with T0, you always have to go to T0. If T0 is making an announcement, they'll come to us for response, or they'll say, is this okay? Right? So, that's usually normal when you have something going out that involves two companies, right? In the press release, you go back. So Goldman knew that, this was coming out. It wasn't like, they're trying to hide it or anything. But, yeah, it represents the first step, really, that banks have taken where they're offering that customizable exposure, right? That's what they're saying, right? It's to the crypto market on behalf of their client, right? So, taking that off of what they're saying in that press release. It's a big deal. Galaxy Digital is over the counter, but they want to be on the NASDAQ. It's very tough. I mean, if you're looking at SPACs with crypto, they don't really want to touch crypto because the SEC keeps coming back and saying, there's no rules on it. They come back with tons of questions, and again, with us, we have, our security token traded. I mean, the goal is always to be, a New York Stock Exchange or a real publicly traded liquidity once we get that. Otherwise, the token makes a ton of sense, right? But just to get to that and knowing how SPACs are looking for deals, which, by the way, I'm going to tell you something about SPACs. The SPACs, what they do is they pull money together, they raise money, and not to get off to topic here, but they raise money, and then they have usually 12 months. Sometimes it might be extended, depending if they want to pay more money as a holding company to find a company to buy, a private company to buy. That's been really hard in this environment, right? A lot of the companies have been bought, but that's what they're looking to do, right? So what happens is if they don't, they have to return the money back, but they don't return all the money back. The people who have the early investors in this SPAC who put it together will invest anywhere from I would say $5-7 million in total of, let's say, a $50 million SPAC. Now, they're going to lose that money unless they find an idea. So they're trying to find ideas, which is, and can't disclose anything, but and why I know this, but they're trying to find any idea because it doesn't even matter. They're in at $1 or $2, right? So this is going to come out at 10, even goes to 5. They're out there making a fortune. That's what SPACs are about. That's why Chamath is barely in any. The SPACs that he's come out with, he's barely in any of them. He made an absolute fortune, promoted them. They come out absolute top. You look, those SPACs are all down 80%. He's gone. He's out, right? And that's what he does. And good for him because he can get away with it because there's a lot of stupid people out there that believe him and believe that, he provides value to these things and they're going to go higher. And he talks about this whole thing. My point is in Bitcoin, they're coming at Bitcoin related companies and security token related companies. And, when they went through the due diligence process, the SEC has come back with tons of questions, especially, it wouldn't be questions with our security token structure because it's very pure, it's a good structure, and it's a security token, right? So it's the cap table, everything's set. But some of these other ones are going from utility tokens to security tokens. They try to get that money in the SPAC and get that $50 million, right? Mm-hmm. And the guys are happy with that because now they're not going to lose $3, $4, $5 million. They're going to set $1 or $2 and they could sell it. But my point is, there's a lot of SPACs out there. A ton of SPACs out there that are dying, that are about to expire, basically. And they're dying to do deals, which means anytime you see a deal come up, a SPAC deal from here on in, do everything you can to short it. Just do everything you can to short it. I mean, they're buying the company out because they think it's great, and they're going to have this whole road show. They're going to try to get as many people in there. They're doing it because they have to. They don't want to lose the money because they're in at $1 or $2. You're going to see that thing go from wherever it comes out, 10, 11, it may hold, and it's going to absolutely crash. But be careful of SPAC deals coming out. Not everyone. They might find a really good company out there, but there's a lot of SPACs looking because that clock is ticking right now. But that's what's going on with, you see it within, again, trying to go after crypto companies and stuff. I didn't want to go too much off topic there, but when you're looking at what's happening with Bitcoin, what's happening with crypto, the gains that we've seen in the past are nothing compared to the gains we're going to see in the future. Is there a lot of shit out there? Absolutely. Absolutely. But crypto is here. The institutions are late to the party. They have trillions. If any one of you out there, I know some people like the central, we want centralized government. We want nothing involved. We want zero laws. If those are the same people that own Bitcoin and are holding on to it forever because they think it's going to go to 100,000, 500,000, a million. It's not going to get there without trillions of money coming into it. It can't. The math doesn't work. The only way to happen is for institutions to be able to come into this market, which is now the U.S. is pro-crypto. Now we know they're pro-crypto. Yes, there's going to be regulation. Know your money's safe and real legal activity and stuff like that. That is a really big deal in this industry. You're going to see a lot of the best play, even outside the U.S., come into the U.S. This is where the money is. They can have projects here. It's really exciting times for crypto. It is here. Institutions want it, and all the innovation, like I said. Facebook changed its name to Meta, right, for the metaverse. Metaverse flows through crypto. Okay, that's where it's going to flow. Decentraland, Sandbox, there's others coming out. Much, much better technology, amazing technology than even those two. That you'll see in our crypto intelligence newsletter, but there's just a lot of, you're looking at security tokens, you're looking at FTs. These are innovations, right? DeFi, this is changing industries. And, just to see Goldman getting in now, right? And you're going to see announcements like this, Daniel, over and over and over again. It's really exciting times. I'm not saying Bitcoin can't go to 30,000 or 25,000. I know in 5-10 years, it's going to be incredibly higher, and it's going to be a spillover into so many great cryptos. And the ones that are focusing on those trends are going to be absolutely enormous. And venture funds are piling into this thing. You're seeing more and more money going into this. Is a sector that's here. It's for real. And you should have exposure to it. You need exposure to this, even if you're risking a small part of your money, because the gains could be 10x, 100x. That's where we're seeing this industry if you get it right. And the fact that you can get in at something at cheap levels is really, really exciting. Just to see this announcement and see how far we've come, and now Goldman's getting, to me, it's awesome. And you're just going to see, I think the floodgates are open right now, and you're going to see a lot more money come in. So not to rant and go on and on and on, but it's something I'm really excited about being in this industry. Yeah,
that's a great point. I mean, this was the first on the trade. So that's the first major bank to make a trade in this type of non-deliverable option. Like I said, it's settled in cash instead of the underlying asset over the counter. Yep. That's a big deal. The press release from Galaxy talks about how Goldman wants to continue. They did option trades last year. So, yeah, I mean, you're right. Institutions want to get in. There's massive amounts of money to be made. And
not
the little
guy. It's the clients of the institutions.
Right. Well,
and that's a big deal because those clients will go elsewhere.
To disagree a little bit, not JP Morgan, but Goldman wants in. Goldman wants to make a lot, or at least I think.
They all want to make money.
Yeah, exactly.
Right? They want to make money, but their clients are going to go to, if they're not getting that exposure, they're going to go someplace
Absolutely.
else.
Yep.
And that's the thing.
I agree with that.
They don't want to lose those assets in the management, and that's why you saw huge lobbying dollars going behind. I mean, out of nowhere. Did you see the daylight saving time thing? Did you see that? The daylight savings?
About the passage of trying to get rid of it?
The Senate passed, and now they ex-Biden, and this goes to what I'm saying here, in terms of lobbying and stuff like that. So, and which sucks is, it makes sense on every freaking level, right? Everybody wants it. Everybody wants it, right? Just get rid of it. It's useless. It was for World War II to save money, electricity. It's stupid, right? So now it came out, the Senate voted yes, and now it goes to the House, but they ex-Biden, he didn't comment on it. So Biden didn't comment on it because he has to see the polls of what people want and what the people who voted for him, which sucks, right? So I can't stress that point enough. Like, he can't come out on the fly and say, this is bullshit, we got to change this thing. I mean, that's something that Trump would do and get himself in trouble with his party. He would never ever do that. No, he can't say anything. He'll say it after he talks to everybody and have the line say, okay, yes or no. Yeah. But the lobbying dollars that have gone into making sure that this announcement was made, we have to go pro crypto, we need to do it, or you're going to lose this. Other countries are going to be happy to get these trillions of dollars.
Yep.
So let's set up a framework that works for everybody. And I'm glad that's happening. And that's really going to open up the floodgates because you're going to see tons of money come into a lot of great situations. And and I think it's really good times.
Yep. I know we say a lot of the, our job here is to say the similar thing or the same thing different ways, especially on great topics like this. But as an individual investor, I mean, just keep scaling in or start and gain exposure right away. Don't take all your assets in, but, I've talked about been buying different stocks over time, especially Galaxy Digital, and it's frustrating when things are going down. But if your thesis doesn't change, keep scaling in to your position size, and you just definitely want to have exposure to this. Don't continue to watch all these developments and say, oh, I should have put money into this without putting a little bit in. Get some skin in the game, and if you're tired of hearing that, then email me and tell me you finally have skin in the game. Daniel at CurzioResearch.com.
Yeah, and guys, look.
Beat you to it, Frank. You don't even have to ask me.
Yeah, what's your email again? But and last note here, it's, we have Crypto Intelligence, which is, a high-end product, and it's a little, expensive, but put like $100 into Bitcoin. Learn how to, get a wallet. Go on Coinbase. Again, crypto people wouldn't really recommend it. They have a lot of cryptos in other places, and that could be in a little bit expensive platform. But just learn this stuff. And for me, what I'm realizing is our newsletter is more on the expensive end. We need to come out with a newsletter which is a very low price that educates people, that shows you how to buy some of these cryptos, and it'll be risky. And this way, you educate yourself. You don't just go in and say, you don't. For me, I'm still educating myself every single day in this industry. That's what I love about it. So it's not like you got to come in and this guy knows so much more than you know. They know the basics, but man, the new list of cryptos and the innovation that's taking place, you're still extremely, extremely early to the party. It's like saying, I don't want to learn about the internet. We saw that. We saw that with so many older people and emails. I don't want to get on emails. I don't want to do this crap. It forces you. It's going to force you to do it. It's going to force you to learn about it. So it's here. It's early. It's like the internet. There's just so many different avenues this could go, which you can't even think about where it's going to go right now. Just like you couldn't even think about when the internet's going to go in 2004, 5, or 6, where it is right now with 5G, data analytics, AI. I mean, it's social media. Social media didn't exist, 12 years ago, 10 years ago? I mean, in certain parts, but not the way it exists now. But what's the next phase? It's still, innovative in a certain way of how you're using the internet with streaming, right? So, with crypto, just a little bit of money in it. You can find a lot of that, just easy to read stuff on our website, stuff that you don't have to pay for. We write about, Dan, you write about crypto all the time if you want at curzioresearch.com. But that's what I'm thinking we need to do. We need to get a newsletter out that we charge, less than $100 for, that the masses can really follow and take a look at this and learn and educate them and teach them. And, because you need to get into this industry. I still get tons of questions. I don't know too much about it. This is your chance to learn a lot about it. And I promise I'll get that done for you guys. But I think we'll leave it there, Daniel.
Yeah,
right?
Covered a lot. Good stuff.
All right,
Breaking
great.
news. Yeah, keep Frank and us and I accountable. That's fun. Hell, I didn't even know we were thinking about a new newsletter. That's news to me as well. Great.
Yeah, no, just I think it makes a lot of sense. It really does. So, Dan, thanks for coming on, guys. Thank you. Questions, comments, again, you got Dan's email address. Mine's frank@curzioresearch.com. We're here for you. And I will see you actually in about not even 24 hours, and less than that. So, podcast coming out and really good stuff. Surprise, because I'm going to have a great guest tomorrow. An awesome, awesome guest. I promise. He's good looking. He's nice. Looks a little bit like Daniel. But tomorrow's podcast is going to be really, really cool. I'll see you then. Take care, guys.